Hey, 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 everybody. Happy Thursday. It's March 13th. It's the Real Deal Pod with Allister and Geoff, and we are so happy to be back here with you for episode number 48. Man, what a beautiful sunny day. It's been so busy, so much going on. We've had rate cut announcements. We've had tariffs that have gone into effect. We have actually a real estate market that seems to be picking up and getting pretty busy. Again, we're seeing prices soften a little bit, but we're seeing activity ramp up. I know Geoff's been busy, I've been busy, but we are never too busy to sit down and enjoy our time and deliver this podcast to all of you. With that being said, Geoff, my man, how are you, buddy? What's going on?
Yeah, I'm doing good. I'm doing good. It's nice to see the sunshine out. I was up in
Isn't
Whistler
it?
yesterday.
Oh, how was that, buddy?
Yeah, it was a 0 out of 10 for visibility. It was a
Okay.
10 out of 10 for snow. And you tested the gear was tested. It was raining. It was wind. No, sorry, it wasn't raining. It was snowing. It was windy. It was chilly. It was cold. But a great BC ski day for sure. If we had a little bit of visibility, it would have just been an amazing, amazing day.
I'm glad you're alive because the lack of visibility, Geoff, could mean you go skiing over the edge of cliffs, and that's just wildly insane. So good on you. I'm glad that you're here safe, not just for me, Geoff, but for the rest, just for all of us, Geoff. And we're all happy that you're safe.
Well, it's funny you say that. I was skiing with a buddy of mine, and I'm smart because I follow. I never want to lead, especially when you can't see. So
Right.
he was bombing down the hill, and I was just following him along. And before I knew it, or before he knew it, he went over a dip and just basically yard sailed. Skis went one place, poles went another because he actually hit a dip and he didn't see it. And then before you knew it, he was
He
ass
was
over
sailing.
sideways, as they say.
Oh man, that's rough. That's rough. Oh man, that's awesome. Well, again, we're happy that you're safe, Geoff, and most importantly, we're happy that you had a great time.
Yeah, it
So,
was get
man,
up
so
on
let's
those mountains, lots of snow up.
right. I
Yeah.
know, man. So we got, like I said, we got a packed pod today, man, because there's been a lot of craziness going on. But I wanted to start, as always, Geoff, with our Did You Know? Because I've got a pretty darn interesting Did You Know for everybody today. So, in a surprising turn, Premier David Eby has acknowledged that real estate investors play a vital role in housing affordability, everybody. It's funny. So, at a recent Realtors event, he admitted that investment, even flipping in pre sales, fuels housing development. And now he wants to channel that investor energy to a boost supply, especially in the pre sale market struggles. So I started laughing to myself. I was like, do we have an election coming up? Because all this stuff he was saying was all campaign trail stuff. But but in in jest, like I'm laughing at it in jest, but it's all blatantly obvious, right? It's everything that we've said, even when he's been throwing out these just insane rules that he's been setting forth. So he also pledged stronger protections for small landlords, recognizing their hesitancy to rent out properties due to tenant risks. He said his government is exploring ways to let investors contribute to purpose-built rentals with professional management, reducing liability while increasing rental stock. So the underlying thing there, everybody, is he's still trying to take the rental market out of the small investors and put it into bigger purpose-built multi-unit properties, much like I say we have in Manitoba, right? I said it before, Manitoba, you don't really, we don't buy apartments out in Manitoba. Apartments slash condos or whatever we categorize them as here, those in Manitoba are purpose rental bills. So when you're purchasing your first property in Manitoba, you're purchasing a townhome or a single family home, right? You're purchasing that. You're not purchasing a condo. You're renting. Those are all purpose rental bills, right?
So are they
Um,
encouraging more of the developers to build these rental components
yes,
or these apartments, and rather than selling them to investors, keeping them and then
keeping them.
operating it as a rental under one
Yeah,
roof kind of
and
idea?
under one roof. So, for example, yeah, like in Winnipeg, you have Sussex Realty, right,
Right.
or Global Management, and these are companies that own these buildings, right, and they rent them out and they handle the maintenance and all of that sort of stuff themselves.
Yeah, I have a actually the buddy that yard saled all his ski equipment and wiped out. He's a land developer and a developer. And right now, to your point, as an investor, pre-sales are really taking a beating.
They're getting
He was speaking
smashed.
on a couple of his projects, and
Yeah.
again, obviously, he's intertwined in that development world. But pre-sales are taking a beating.
Yeah.
Right now the market is soft. Right now, as a developer, it's very, very difficult to get financing. In fact, he was saying that 100% of the units have to be sold even before they will consider.
Consider it. Yeah.
And really, he was even saying, just to your point, he was thinking of possibly shifting gears, and rather than selling individual units, is completing on is doing these developments, but creating them as rentals,
Yep.
stratified rentals, and just operating out of one house. So yeah, it's interesting when you go behind that onion and people that are in those trenches to have those conversations. Because back in the day, and even today, a lot of people is, I want to be a developer, but to those developers out there, we know it's hard, and
It is.
we're seeing developments in Burnaby that are going bankrupt. We're
Yeah.
seeing developments that are coming to completion and basically not able to complete with a lot of the sales that have come in because of market value.
Market value dipping. Yeah.
And even again, we're going to talk a little bit like these tariffs are now coming into full blown. That train is on the tracks, and what is that going to do to, um, lumber and steel and everything else
Yeah.
that's going to come to it. So it's a little bit of a scary world for developers. So
It is.
and investors, right?
Well, and
So
that's it, and that's the thing. But it's it's a dramatic pivot
oh
from
yeah,
his previous stance on how he's been, right? So
yeah.
so that's the key thing. So of course, the room of us realtors, we're going crazy and applauding and saying, finally, you've seen the light. But the bigger question now is, will he be able to balance investor incentives with his affordability goals, right? And that's going to be the key behind all of this. I believe in purpose-built rentals. I truly believe in those. I believe that those are a necessity. I think the whole condo market, the way that it is here, I actually think is twisted. I think it's crazy, right? I think it does take away from people's affordability, right? Being able to own. So I think it is the more purpose-built rentals that we do come to market, the better I think it'll be for everybody.
Yeah.
And I think the better it is for investors as well.
I just think it has to be consistency. Again, if
Yeah.
you want to change something, you have to be consistent in what you do and the messaging that you're
Yes.
relaying. And it's just, again, it just dumbfounds me on how the messaging is not consistent, right?
Right.
So how do you ever change something if the message and the process is ever changing?
Every
It's
2 years,
impossible.
you're
It's
right. You're
impossible.
you're switching feet every year, every 2 years. You're changing your messaging. You never accomplish anything, because you're constantly reversing back to
Yeah,
change what you did to start trying to do the thing, to try to do the different thing. So you're
yeah,
never getting to the different thing. You're only getting back to square one
yeah,
every single time. It's
yeah.
crazy.
Yeah,
Yeah.
I've been starting to listen to podcast and really kind of being open to that learning process.
Mhm.
And there's a key message from these great business coaches like Jim Rohn and people such as that. You have to be consistent in what you do. If you are not consistent in what you do day in, day out, you're never going to get where you need to be. So when I hear this, that's the first thing that pops into my mind is how are we going to get where we need to be when we can't have consistent messaging or consistent policy? And that could be good or that could be bad, but it just seems like every 2 years, as you said, it changes. And that being and saying that, how are we going to get there? Right?
That's it, right? We gotta hope and pray that at some point we just stick to the message. And for good or for bad, man, if this is going to be the hill that you choose, then make sure it's the hill you're ready to die on. That's all I ever say. Like, I am okay if I disagree with somebody's opinion. I'm okay with disagreeing with somebody's opinion, but I will applaud them for following through on their commitment, right? Because they believe it's the right thing. No, they believe it's the right thing to do. It's not for me to judge and say it's the right thing to do because it could succeed.
Right? You know, chuckling, Allister?
What's that?
Donald Trump and his tariffs.
Yeah. Hey, listen, it's true. He's following through. He's doing what he said. He's committed. I don't agree. He's an idiot for doing it. And I will say, like, and I wish and the only way that we can address it, right, is if we're consistent back. And that's the key. Nobody is ever consistent in their retaliation or their messaging back to him. And that is why he wins, right? I know that's right. And that's why he wins. And that's why I've always said he's easy to beat. You just say it's going to happen and then you just follow through and do it. Right? Like, that's it, right? You just put that petulant child back in his corner. With that being said, Geoff, you know how I have all these little sayings for Trump? I got a new one. It's called the FF Trump. Because you know what's funny? I always laugh about all his little garbage names that he makes up for people. They're not even funny. They're not even clever. But I've got the FF Trump. So, you know, like the SS Minnow. Remember that from Gilligan's Island? So it's like a garbage scow, like the FF Trump. So just imagine what FF stands for. The first F, something that's large. The second F, something people like to do. And then Trump, the FF Trump. It's a good one.
Well, I'm still trying to figure out the FFs but you know what? I
think about it. Something that's large.
Yeah. Okay.
Starts with an F.
Yeah.
3 letters.
Yeah. Okay.
And the other thing is something people like to do.
Yeah. Okay. Got you.
4 letters. Starts with an F.
Yeah. Okay. Got you.
FF.
Okay. FF Trump. Okay. I think I know what the FF is. But I'm not going to say it. I'm not going to say it.
We can't. That's what I'm saying. Yeah, that's what we call it, the FF.
Well, another thing, March 12th just rolled by yesterday. I wanted to touch on it because many people are wondering, inquiring, do know, maybe not know, but the Bank of Canada had its meeting regarding interest rate yesterday, March 12th, and we have cut our overnight lending rate 1/4 of a point.
Yep.
And what that means to the prime rate is that your prime rate has gone from 5.2 to down to 4.95%. Now, again, folks, remember that overnight lending rate, when you see it, it's going to say 2.75%. That does not mean that's your prime rate. The prime rate that you need to know and understand has went from 5.2% down to 4.95%. And more importantly,
just Geoff, I'm going to pause 1 second, just so everybody out there knows. This is Geoff's favorite day, is March 13th, like the day after a rate announcement call, because then he starts fielding all of these calls and having to explain to everybody the difference between the two. So the next time will be April 17th. He will be having to do the same thing.
It's, you know, again, knock on wood, I haven't had too many phone calls today.
Oh, that's good.
But I think as we nestle into our evenings and listen to whatever we're listening to, I have a feeling we are going to get a flood of these phone calls. But you know
Yeah.
what? We're very proactive. We reach out in many different ways to explain. But again, hey, here's another platform to explain. Our
Right.
overnight lending rate, folks, yesterday went down to 2.75%. That does not mean our fixed rates have gone down to 2.75% or have lowered. That does not mean your prime rate is 2.75%. Your prime rate, yes, it did drop a quarter of a point, but it went from 5.2% down to 4.95%, right?
Yeah.
So again, very, very important to note. And as you noted, April 16th is our next Bank of Canada meeting. And
Yep.
again, I'm sure within the next 4 weeks, we're going to hear a lot of opinion on what that's going to be. You're hearing again,
It really will.
yeah, you're hearing with these tariffs that just rolled out, how the Canadian economy is going to react to that. We're going to take a look on how unemployment here in Canada reacts to that. We're going to see if
Well,
there's
just to
additional
pause on
tariff.
that,
Sorry?
I was just going to say, just to pause on that to what you were saying, like, so when Macklem announced, when Tim Macklem announced the rate cut, he stated that, you know, this one, yes, and then now with the tariffs coming in, there's a lot of uncertainty. So we're going to have to follow what goes on the next 4 weeks, right,
Yeah.
to see if we are going to, in fact, have another rate adjustment come April 16th.
Yeah. I think we're going to see another rate
I do
adjustment.
too.
I
I
think,
do too.
again, just kind of doing what we've been hearing even prior to the tariffs. Actually, I think the tariffs are going to are going to accelerate it more so than if they weren't. But we are going to see rate drops. What they look like, again, depends on who you're asking. But we feel that variable rates are going to drop anywhere from another 1 to 1.5% here within the next 12 to 16 months. But again, things always change, and it really is going to rely on what these tariffs do, how Canada's economy responds, how our unemployment in the industries that these are affecting react, and just really kind of, again, a whole bunch of details within that to see where it goes. But to your point, Allister, I think it is a month-to-month thing, and that crystal ball, even when I listened to our first pod, to our 14th pod, to our 28th pod, it just seems that it's a continual change, right? So there's no consistency in what's being messaged. So
No, it's hard, and that's the thing. And we've had this conversation offline. I know I actually had this conversation this morning with some clients of mine, and we were just discussing the what we're going through right now, right? And we were again just now talking about month to month to month with Donald Trump, right? And his wildness on these tariffs, saying, "I'm going to slap 200% now on you on tariffs because Doug Ford said he's going to shut off our energy, and so I'm going to retaliate this way." And we've already seen the markets in the United States, like the markets in the United States, everybody are going bananas. They do not like Trump right now for what he's doing. They are suffering mightily. So what I've been saying to everybody is, with all of this wildness going on, predicting anything is going to be impossible. You can't predict anything in this wildness. So it now is going to take being smart, opportunistic, and acting in the now, right? Because if you focus on anything going on within the next 4 years, saying, I'm going to base my decisions on what's going on within or through after the next 4 years, it's crazy talk. It's crazy talk. You won't be able to do it, right? Right now, if the time is now for you to make a decision, you wanted to move, you needed to move, right? There's been a life change, so you have to act. You have to act. Then the time is to act now, right? We don't have actually that luxury anymore, maybe, of saying, I'm going to wait until the fall market, because the fall market could be a very bad market, and which could be good for somebody or bad for somebody, or it could be a very, very hot market, which could be good for somebody or tragically bad for somebody.
yeah.
Right?
I always say, as an investor, as a business-minded person, people look forward. Those types of people look forward to what we're going into now with the stock market.
Yep.
I'm not going to use the word crash, but
No.
falling.
Fluctuation. It's a flux.
People in the fear, like again, Warren Buffett, be greedy when people are fearful, right? And I find a lot of people love this type of environment as far as that our investment are fearful. I'll just use the stock market as an example, pulling everything out. This is where they're coming in and basically getting great deals on great stocks that just are plummeting just because of the fear factor and the unknown as far as what's going on, right?
So I love that you put it that way. And this is the way I'd like to explain this to people. The markets, everybody, whether it's a real estate market, a stock market, we'll take Canada, for example. The market is built on the hopes and the dreams of Canadians. That is what the market is actually built on. It's built on our hopes. It's built on our dreams. It's built on our aspirations. Okay? So the bubble may contract. The bubble may expand, but it will never break because it is always supported by our hopes and our dreams and our aspirations. So we will never, ever, as people, allow that bubble to break. So that is why when we talk about that bubble breaking, or you ever feel that bubble's going to break and you never feel like it is, and you're always saying it has to, come on. How come it hasn't? It's because the will of us as Canadians, the will of us as people will never allow that bubble to break. So again, everybody, it may contract, it may expand, but it will never, ever break.
Oh, I got a different spin on that, and not to kind of take away what you're saying, but I do believe it does break. But to your point, it's the will of everybody that brings it back, right?
That's the relative term. That's because to break is broken. Once it's broken, you can't fix it. And that's where I'm saying it contracts. It doesn't break. It contracts. And then what we do, the will of Canadians, we build it back up again. And that's where the expansion comes in. So that's what I'm saying. Break is broken, right? Done. Bottoms out, plummets, finished, right? It'll contract. And that's where we start building it back again.
Yeah. I think, and again, not to get too, even if you break something, you can still fix it.
Sure.
I think it's the word, because, how many times does your engine on your favorite car blow up and then you go?
Yeah, and I don't like the word break. So I don't like the word break because it's not break, because to me, real estate breaking. Okay, so let's be honest. Let's talk about real estate breaking in British Columbia. Okay? Real estate breaking in British Columbia is everybody's homes falling to $445,000. That's real estate breaking. Do you think that can happen?
Well, again, if we take a look at the US, is what happened back in their
Do
day.
we truly think that we're going to see the average home price that is right now at $1.15 million in the Fraser Valley, let's say Langley? Do we truly believe, in all reality, that we could see that drop down to $445,000?
I'm going to say no. And I'm going to also say this, is that we have seen it not in Canada, but we have seen it in the States. Hold on. Let me finish. Yeah. We've seen it in the States where a lot of people were walking away from their homes because they owed more than what it was worth, less than what they owed. So yes, they did walk away. It didn't break. It corrected severely, or even correct is probably the wrong word, but it also comes back. You take a look at
that's contracting, Geoff. That's what I'm saying. That's contracting. That's not breaking. And so that's not breaking. And that's what I'm saying, right? So even us at 1.5, it won't drop to 445. It may go down to, let's say, 1 million. Okay? That's not broken. That's just contracted. And then when it goes back up again, it expanded. And that's why I don't like we're using the word break, because break is a negative term. That's not what it's doing. It's contracting. And I think when we use the word break, that is when we do a disservice to people that don't understand how markets and how economies work. Because markets and economies don't break. Markets and economies contract and expand.
Yeah.
Right? Right? That's what happens. So that's why I don't like using the word break. It's not, I don't think it's the right word to use for people.
Yeah, I agree. I don't like that word. It just has a whole bunch of different underlying meanings, because again, we can have the argument that things always break and we always fix it, right?
Sure. And that's it. That's why I like contract and expand, and that's why I always say, because it's built on our dreams, on our aspirations. And that's truly what that's what stocks are. Stocks are dreams and aspirations, right? And that's what housing used to be living. But now housing is turned into real estate is turned into dreams and aspirations, right? It used to be dreams and aspirations of us, of families, and growing old and having all those things. Now it's how much money can I make on these things? And so that's where I'm saying it'll contract, right? Sometimes the market will dip a little bit, but our dreams and aspirations will always build them back up again. So
yeah, I agree, and we've seen that throughout history, right?
That's exactly it. That's exactly it.
So you know what? February 4th, tariffs were introduced.
Yeah.
Then it was delayed till March 4th.
Yeah.
Which has come and gone.
Yeah.
And I just want to recap. Now we're in March 13th. I wanted to kind of come back to this because now tariffs are in effect.
Yeah.
Right?
Yeah.
And remember what those tariffs are, folks. That 25% tariffs are now in effect on all imports coming from Canada and Mexico. Okay. And jump in here, Allister, because there's so much dialogue in this. It's
right. So right now we've got steel and aluminum,
right,
is what we're being taxed on.
Right. We are also hearing about surtaxes coming in from China. About 100% tariffs on EV vehicles.
EV vehicles, which is an interesting one that they threw out there. That was one that was a head scratcher for me. In all honesty, even though I have an honors degree in political science, right? So I actually, threw my poli-sci hat on and was trying to figure out that one, because to me, in all honesty, that seems like a petty shot. I couldn't see the logic in that one. And so if anybody out there reach out, if somebody out there can reach out.
I had to Google what are some Chinese electrical vehicles. I've never even heard of any of them.
Exactly. So if somebody out there can reach out to me and just help me understand that one a little bit. I understand all the other stuff, but the EV vehicles, I couldn't wrap my head around that one.
Well, and again, when I actually heard that there was a 100% tariff coming from China onto Canada, I thought it was on all goods. But it's important to understand, and I had to Google this myself, so I could be partially right here, but keep in mind, it's not on all goods, right? It's on Canadian rapeseed oil, oil cakes, and peas, and an additional 25% tariffs on pork and seafood.
Seafood, yeah. I know that was a big one too, was a 25% on seafood, because I know for what they're saying out in the Atlantic provinces, right, that now with this tariff on steel and lumber, coupled with this 25% tariff from China, with China on seafood, the Atlantic provinces are getting hammered right now.
Yeah. Well, and this is where I go, and we've said this before, is when you hear it, do a little bit of digging in it.
Exactly.
Right? And I had a buddy, not my buddy that I was skiing with. He's actually he's a little bit brighter of a light in the closet than some, meaning he's very intelligent. Yeah. But we were having a conversation on the chairlift, and it's like, oh, did you hear about the 100% tariff on that China is doing? I'm like, no, right? And then that was it. That was that conversation. That was where it was. It wasn't, hey, it's 100% surtax on EV vehicles or 100% tariff on rapeseed oil and oil cakes and peas.
Yeah.
and then
right?
at 25%, you know, so again, I just encourage that when we hear things, just double check things. And so when you're communicating it, that you're communicating it in the right direction. And you know what? We'll be the first to say, Allister, we don't, I, I could be wrong on a lot of things that I talk about, but I'm digging a little bit more into it when I'm communicating it because I don't want to be the guy on the ski lift. Hey, we're getting 100% tariffs from China. It's like, oh, wow. And then all of a sudden, that roller coaster ride goes from me to you to you to somebody else. And then before we know it, we're listening to a whole bunch of misinformation.
Well, and that's a beautiful point, Geoff, because the thing, especially with everything going on right now, we are going to see a bunch of articles with what is called clickbait headlines. Yeah. Okay. And clickbait headlines. So to your friend's point, let's say he might have just glossed over the clickbait headline that said China imposes 100% tariffs. Yeah. Right. What that's generated to do, of course, is to have everybody click on that article so that those providers get paid. They make some money from everybody hitting that article. The only way they can do it is put something just so crazy that makes you click on it. So if you only gloss over it and you don't click into it, then what you're going to do is spew out this craziness, right? So please, again, if you see an article that is absolutely shocking, just absolutely shocking to your mind that you don't believe it could be real or sounds just nuts, make sure you click in it because it is true. It is probably crazy and nuts and doesn't even make sense, right? And it is a clickbait article geared towards you and geared towards getting you to click in and make somebody some money. Yeah. All right. So understand the articles that you're reading, understand the sources that you're getting it from, right? If it says .jabadon.org cakes, right? Chances are it's some dude in his basement, right? And he's getting paid from this nonsense.
Well, and I'm interested to see what the tariffs are going to do. I think we're in day 2 of them.
Yeah.
And again, like I'm going to bring it back to my world of interest rates, you know, and what that's going to do to the finance world. And again, guys, I guess if you want to take a look at tariffs and spin something half full, it is going to accelerate rate decreases. What those are going to be are yet to be determined. But the one thing that we do know is that if the tariffs are consistent and they're going to go the way that Mr. Trump says that they're going to go, we are going to see Canada in a recovery state.
Yeah.
And again, recession means lower interest rates on the variable rate side of things, like the overnight lending rate and the prime rate. What that means is that the rates are going to drop here in Canada if Canada does go into a recession. And the result of that is when you have lower interest rates, it's supposed to stimulate buying. So again, that is something that we can look forward to it. And then there's a consensus to say in your sandbox.
Well, in my world,
what's that going to do in the real estate side of things?
And on the real estate,
right? Could do one of two
things. So on the real estate, so on the real estate side of things, what it's going to directly impact right now is, of course, the pre-sale market because of tariffs on aluminum and steel, right? So already a damage, and I'm just going to call it a damaged pre-sale market. That's literally what it is right now, right? A damaged pre-sale market is going to suffer even more. All right, so that's number one. Number two is it may have now the adverse effect of increasing the resale market. So now we could see elevated pricing, right, in our resale market, which not saying we're going to head into what we saw into COVID, but we could see, right, increases of a good 15%, right, on your home, on the value, on the prices of homes, right? And I think 15% is an easy number to see.
Yeah, and depending again who you listen to or who you're talking to, when we're talking about pre-sales as of today, they are definitely in a buyer's market, right?
That's what I said. It's already a damaged market. They're already suffering. Yeah.
Oh, okay.
Yeah.
I thought you were saying there you can see them increasing in value by 15%.
No, not the pre-sale. I'm saying resale. No, the
Oh,
resale
okay.
market. No. The damage that the pre-sale is going through right now, right? It's going to have the resale market increase.
Right.
Property
So
prices will increase on the
for
resale in the
simple
resale
terms,
market.
what is a resale market?
Resale market is the home you live in right now when you're selling it.
You gotta
Sorry.
speak
Yes.
English, Allister.
I'm sorry,
You gotta
I'm
speak
throwing
English.
around realtor lingo all the time. Yes, so the resale market, so that's what impacts. So when the pre-sale market is damaged and hit and suffering, the resale market, that is actually what increases. That is what picks up. And that's what we saw during COVID, right? We saw aluminum and steel go up, the prices of lumber, the prices of steel go up, and that in fact that affected the pre-sale market. That in turn increased the prices of the resale homes, right? And that is probably what we're going to see happen again. And that's what I'm saying. We saw the values of homes increase 35%, right? During COVID. And that's where I said I don't see it happening like that again, right? But a 15% increase, it's an easy thing for me to see.
Yeah. I think there's a lot of similarities between the situation or the environment we are in as of today to the environment where we were in that COVID days, and
Yeah.
they are not the same, number one, right?
No.
But there is similarities to them,
Yep.
and we saw the outcome of COVID, and hopefully we're going to see, well, depending on the industry that you're in and what you
Right.
do. But when we're talking about real estate, we've seen it when the sky is falling down. We've seen
Yep.
it when the interest rates are dropping as a result of that. And then we've seen the human reaction to that and what it resulted in regards to purchases with real estate, right?
Yeah.
And we're kind of seeing that again as of today, where, hey, the new cherry on the pie is the tariff conversation. The new thing is that because we're now going to hit a recession and the stock market's crashing, there's uncertainty in the world. Canada is going to suffer. Now we're going to see rates starting to decline. And again, they have been declining for the last 6 to 7 months, right?
Exactly.
Where
Yep.
they're going to go, we really don't know, but we have, I guess, an understanding. It's all dependent on how our economy is going to react and how the world markets are going to react to, really, to be fair, as far as what Trump has triggered, because Trump
Yeah.
has triggered not a lot of uncertainty, not only in Canada, but also worldwide.
It's world's uncertainty. It's world uncertainty.
And because of that and many other things, we are going to see a dip in rates. And I think because we are so I'm not going to say short-sighted, but the last time we saw this, we just saw the market increase. So we assume that it's going to happen the same way, right?
Yeah.
So
Yeah.
I'm really interested to listen to this pod 3 months down the road, 6 months down the road, and see what we're saying then. But again, folks, this is where I come back. You know what? If you ever wonder how people make money, people make money in environments
Right now.
that we're in now, where people are scared, people are liquidating their stock portfolios, people are doing whatever they're doing because they're living in fear. This is the time where you need to start investing in what people are fearful in.
So, Geoff, well put, because just so everybody knows, this is why Trump is doing this kind of stuff. It is for the 5%ers in the United States, that rich, that loaded wealth, to garner more wealth. Because to your point, volatility is what creates cash, right? Volatility creates cash because the volatility scares the masses, right? So it causes the masses to run, and it opens the doors for the rest, right? So to Geoff's point, this is why people make so much money in what they call volatile markets. It's because the people that are scared, the 87%, right, that run away, right, the 13% are there to make money.
Yeah. I think on that, that's it for me.
That's it, for me too. This was really good, man. I thought it's so, just so everybody knows, Geoff and I sat back today and said, we were afraid that this was going to be too much of a regurgitation of what we were talking about through some past tariff talks, but because the tariffs have gone into effect, I think that this was really good for us to set everybody on a baseline of what we're looking at right now. We're not in the what if, the wait and see, and what's going to happen. We are in the right now, what's going on mode right now. So it is important that we constantly have our ear to the our ear to the ground, and our eyes straight and focused to constantly know what's going on, because we got to be able to react. Yeah. We got to be able to be proactive and reactive all at the same time, guys. That's a different game. It's a very different game.
And this is why I think this pod is so great, is because, it's consistent. We've done this now for almost 50
48.
weeks.
Yeah, we are right? 48.
And it's consistent. And again, we have our opinions. They may be right, they may be wrong. These are our opinions. You can hear me and Allister always kind of banter back and forth.
Exactly.
We don't necessarily always agree on everything else, on everything either. But this is just the great thing of being on this platform with you, Allister, and just saying, hey, what's going on this weekend? And it just seems like everything is, there's always something happening, right?
Exactly. So, everything's ever changing. And again, we can't say this enough. This is why in January, when Geoff and I, we don't make resolutions, we make commitments. And Geoff and I committed to doubling down and making sure that in 2025, we gave you even more value than we gave you last year, not knowing, right, that we were going to have this whole chaos that was really going on. We didn't know that this was going to happen. And now, like we've said before, we just feel that it's even more important that we deliver this value to you, and that we try to go above and beyond every single pod to make sure you guys know what's going on. And in turn, it makes sure that we know what's going on, because, man, it's ever changing in our world constantly. And so we got to be on top of this, because we field the calls every day. So we could imagine what you guys are thinking out there every day. So with that being said, keep loving us, keep liking us, keep sharing us, keep telling everybody that you know about us. Geoff and I are always here, and our phones are always open. So I know that we constantly leave our contact information for you guys. If you don't have somebody that you can trust, please, guys, just for the conversation, right? That's all it is. Just for the conversation, please reach out. If you've got any questions about the real estate market, about the mortgage, about the rates, the mortgage industry, your mortgage, anything, just reach out to one of us. We are always there to support and guide you. We are excited and happy and excited to have you guys back for episode 49. Oh my goodness, that's 48 of them, coming up to 49. Like Geoff said, we're almost at number
50. We have a special guest. We got Joe Tablin coming back on episode 50. So
that's right, Joe's coming back to share some financial advice again in this ever-changing world. So guys, stay empowered, stay informed, and most importantly, Geoff,
stay tuned.
That's right, everybody. Stay tuned. We will see you next week. Peace out.